When I got married, my wife was very clear. We need to buy a house. Me, I wasn't so sure. I didn't like the idea of locking away such a large chunk of money. I believed we could invest and build wealth. But of course, we ended up buying the house. But the debate was never really settled. Years later, after investing in the market for quite some time and buying a few more properties, I think I'm finally ready to settle the debate. Is it really worth buying the house or you better off investing? Hi, I'm Nitish and this is Bald Finance, where we make everyday finance a little less hairy for regular folks. Let's take an example of an apartment in Bengaluru for which the rent is 85,000 and the asking price for sale is 3.1 crores. Now, the big question, should you buy it or should you rent it and invest the 3.1 crores in market or some other form of investment and pay the rent from the returns? Let's break it down. Even if you put 3.1 crores in a safe investment like fixed deposit, it will generate enough to pay the 85,000 rental and you'll still be left with some. But here's the twist. In Bengaluru, the rents increase by 8 to 10%. Let's assume 10% for our calculation. So the real question is, can your 3.1 crore investment keep up with the rising rent? Or you're better off buying the house as a hedge? I ran the numbers. Let's take a look. Let's break it down into two scenarios and compare it over 10 years, 20 years, and a 30-year time frame. Scenario 1, where you invest the 3.1 crore and pay the rent from the income generated by this investment. Scenario 2, where you buy the house and it grows at the typical real estate rate of 7%. Now, I know some of you might be thinking, hey, wait a minute, I have seen real estate grow faster than 7% in the last couple of years. And you would be actually right. In fact, a property of a similar size was available for almost half the price at 1.5 crores pre-COVID. But here's the catch. We can't use the recent boom as a representational CAGR for the real estate over long term. If that were to be true, the real estate would double every 3 or 4 years, which means this property is going to be 6 crores in a few years. And if we go back, this property should have been available for 30 lakhs about 10 years ago when this project was launched. And we know it's not the case. If you take a long-term view, the real estate would grow at about 7 to 9%. If you buy the property of 3.1 crores, it will be 5.7 crores in 10 years, 11.2 crores in 20 years, and 22 crores in 30 years. Not bad, right? Now let's see what will happen if you invest it in some kind of investment, and we'll take a look at different investment which are popular and see how it fares. With a fixed deposit, you would start off well. It will generate enough to pay the rent and leave you some which you can reinvest. But as the years go by, it will struggle to keep up with the rising rent. After 10 years, your investment would be worth 4.14 crores, which is 1.5 crores lower than the worth of the house. In 20 years, it will be 3.4 crores, which will be 8 crores below the value of the house. In 25 years, the returns will no longer cover the rent. In the long run, FDs can't keep up. You need better investments. Now, let's say if you invest in a mutual fund with an average return of about 12% and set up some kind of a SWP, systematic withdrawal plan, to cover the rent. Let's see what happens in this case. In 10 years, your investment is worth 6.5 crores, which is 1 crore over the property value. In 20 years, it will be 14 crores, which is 2.5 crores over the property value. In 30 years, it will be 27.5 crores, which will be 5.5 crores higher than the value of the property. As you can see, mutual funds not only beats the real estate, it can also support your retirement. So the big question, who wins? The buyer or the investor? Well, it really depends. If you are a conservative investor, you're better off buying the property. However, if you are an aggressive investor, you can't go wrong by investing into the market. This is Bald Finance, and I'm Nitish. See you in the next one.